All right, welcome, or happy to be here in Oslo. This is my first time, and this is really cool. What Christian mentioned is we are in a revolution. I think the revolution is just starting, and we're really taking finance to the next evolution of what we've seen as a society. So what I'm going to talk about here is I figured this is a CryptoFinance conference, so we're going to start with the basics of what that exactly means. Okay, so I'm going to give you an overview of the industry, where we are, and then I'm going to be a little controversial because we all get here in these conferences and we start talking about how amazing this revolution is and all these cool things we're doing. Well, I'm also going to talk to you about part of the potential downside, right? Because there's always a downside. I personally, I span academia and this industry, so I try to tackle everything like a scientist. In fact, I actually started off as a scientist, a physicist, mathematician, then I had a whole bunch of experience in this industry, and now I'm co-founder of ZenCash, which I think is a nice new, I think groundbreaking project in a bunch of different directions, but we're tackling that privacy space. So we're taking cryptocurrencies to a whole different level in privacy and a variety of domains. Okay, I'll talk about that in another few slides. But I'm also in academia, so I switched over from hard science into finance, wrapping up my PhD now in financial economics. So obviously coming from this industry into a PhD in finance, it was just quite natural to, study Bitcoin. Okay, so I was one of the first academics to get out there and start writing papers and doing research on Bitcoin, looking at the characteristics of Bitcoin returns relative to other assets. It's really cool stuff. And I also teach at the university. I teach a course on Bitcoin and blockchain applications in finance. So I was really excited to come to a conference entirely on crypto finance. Okay, so the big thing that I like to start off with is we're Uberizing finance. Okay, we're going from a model of these kind of siloed, traditional, kind of like oligopolistic organizations that kind of dominate an industry to now Uberizing. Okay, we're going peer-to-peer, and that has a lot of implications across domains. Where some of these domains, I always tell my students, I teach finance students, I teach our honors students, some of our best students, and I tell them, you guys all have, these ideas of what careers you want in finance that you're going into. They traditionally want to go into, investment banking. They look at hedge funds, private equity and whatnot. And I tell them, well, first, look at what we're doing here, and then think, is your job going to exist in 5 years? Okay, so this is the kind of thing that people need to think about before they devote all of this time into human capital accumulation and enter an industry just to realize that they're obsolete. Okay, so try to get ahead of the game. And we're I think fundamentally the most important thing we're doing is we're challenging this concept of what is money. I mean, this is something we haven't challenged in well over 100 years, if ever, really, as a civilization. And now we're taking money and we're making it competitive. Okay, so we're probably not going to overthrow fiat currencies and central banks, that kind of thing, but we are carving out our own little niche in industry where we're starting to have a process where, like me, for instance, in ZenCash, I look at all of our users as customers, and I don't think that central banks like Janet Yellen or the ECB thinks of us as customers. I think they have a variety of reasons for why they set policy, and they change the parameters of their own system, but I really don't think it's in response to customer feedback. But now we've dissociated this concept of money from politics, and now we can actually start competing this stuff and thinking, well, what do our users want? And let's start thinking about these things as parameters that we can then adjust and innovate rapidly in real time. And that's what we're doing. I think that's the biggest innovation. But across the entire domain of traditional finance, everything from remittance, this is a classic case of, you work, a Mexican worker works in the United States, and they want to send money back to their family in Mexico. Okay, this is a classic case of they get slaughtered in fees. Okay, just sending money across an imaginary line. Well, that's something that we've solved, and something that should go away. These fees should be converging to zero very soon. If they don't, there's something wrong. There's some friction in the market. But the remittance industry is going to change. I was just in Aspen a few weeks ago. And met Patrick Byrne, the CEO of Overstock.com, and he set up a very, very elegant solution called T0, which is essentially a blockchain solution to making asset settlement go from 3 days, which typically you sell a stock and you have to wait 3 days to get your money, does not make sense in the 21st century. Okay, so T0 is an innovative company using blockchain to make that go down to zero. Wall Street's not a big fan because they actually captured the float on this 3-day process, and that's going away, and that was a big profit pool for them previously. But this is just one example of a paradigm shift in industry, how we're kind of overthrowing something that was just kind of set in stone previously, but didn't really make sense in the 21st century. Everything from trade finance to venture funding. In fact, I'll talk a little bit more about venture funding. The venture capital industry, they're in a run for their money right now. We're seeing a tremendous amount of capital flowing to very innovative blockchain startups in this whole ICO process. Now, there's some good and there's some bad to that. I'll talk about that as well. But things are changing. I guess that's the big point. One thing that I love, and this is a phrase that I keep bringing up, is private keys are kind of like the new concept or the new bearer bonds. So 100 years ago, probably none of us were investing 100 years ago, but you had these actual paper certificates of a bond, for instance, and you would clip this little coupon payment from your bond and you would mail it in to get your money back from this bond. It was called a bearer bond. Now we have that on demand with private keys. That's a wonderful thing. Good and bad, pros and cons to everything. Right now you could lose your private keys and you're kind of screwed if you do that. But it opens up a whole new dimension now for innovation. Cryptocurrencies represent a new asset class. Now this is very controversial in finance. We think of traditional asset classes like equities, bonds, real estate, it could be fine art, precious metals, whatever. I argue that cryptocurrencies represent a new asset class. Now if any of you out there manage people's money, and I've talked to other people before where they kind of say, well, Bitcoin's stupid, Bitcoin's a scam, whatever. It doesn't matter what you think, what your political orientation is, just analyze the return patterns of Bitcoin relative to stocks, bonds, real estate, gold, whatever else you want. And you'll notice a funny little thing is Bitcoin returns don't co-vary or they're not correlated to the return patterns for any other asset class out there. Now, if you look at portfolio construction, just the science of portfolio construction, if you have assets that don't co-vary with other assets in your portfolio, even though the asset on its own could be extremely risky, you're significantly decreasing your portfolio variance. This is a beautiful thing. So it doesn't matter what your political persuasion is or what your personal opinion is on Bitcoin, you should have a little bit of it in your portfolio because that's going to decrease your overall portfolio variance. Okay, so this is a big thing for anyone thinking about getting into money management. And there's just a ton of capital going to the industry now. If there's nothing else that validates an industry's existence, it should be the amount of capital. And capital doesn't just mean financial capital. It means really smart people who are doing amazing things, who are extremely motivated and trying to change the world, are flooding into this industry. So this is kind of like this holy grail of a career that you could have for yourself. You can make money and you can change the world and do good things. So the people that I surround myself with these days are just really good human beings actually trying to change the world, and we're doing it in a way that makes sense economically. Okay, so there is this ICO Gold Rush. Now again, I always say pros and cons to everything because I'm an academic and I try to remain skeptical of everything. But fundamentally, there's a tremendous amount of capital going to startup companies that would not have had an opportunity to raise this kind of money previously. It used to be you're a smart guy, maybe you have a good team behind you, you create a minimum viable product, an MVP, you bring it to market, you get some customers, and then you go looking for angel investors, or then you go maybe looking for a Series A round from a venture firm, and then they're going to really rake you over the coals and scrutinize you like crazy, and maybe give you a few $100,000, maybe give you a few $1 million. Now you have companies or sometimes individuals that write a white paper. It sounds cool technically, they have a good vision, and they get tens of millions of dollars, okay? Good and bad, because you can think about there's going to be a lot of wasted capital in this industry, but it also opens the door to really innovative people who are doing great things who would not have had access to the capital previously, okay? So it's not black and white, and there are a ton of skeptics out there, okay? I list these prestigious gentlemen from much better universities than my own, even though if there's anyone listening from my university, I kind of say that tongue in cheek. But these guys, Paul Krugman, if you guys have read the New York Times, he has an editorial opinion piece on there. He actually declared Bitcoin evil. And his rationale for that, Bitcoin is evil because it takes away power from central banks and takes away power from governments to essentially tax without representation by printing money. Okay, well, if that's the definition of evil, then sure, we're all evil because we're kind of taking away that power, we're chipping it away at it on the margin, but we're really not, we're really think pretty decent people in this industry. There's Bob Shiller. He's always calling a bubble. He got famous for calling the real estate bubble. But if you do a rain dance long enough, it's eventually going to rain. You're eventually going to be right. Okay, he called Bitcoin a bubble back in 2014. Maybe it is now. He's calling it a bubble again. Who knows? But it's easy to be skeptical. And the problem is that anyone who listened to his advice would have lost a lot of money. There's Jamie Dimon, famous recently for calling Bitcoin a fraud. While there's other, elements of JP Morgan, the company that he runs, that are buying Bitcoin on the dip that, came about shortly thereafter. Warren Buffett just calls everything we're doing a joke. I don't think these people really know what we're doing. Because if they do, I just don't understand how they can say that what we're doing is a joke. We have a computer science breakthrough to one of the most famous problems in e-commerce, this issue of double spending. Okay, that alone warrants probably a Nobel Prize. Okay, we have all these other great companies doing these amazing, innovative things, making people's lives better around the world, and then these people have the audacity to just call it all a fraud without really knowing what's going on. But there are real problems. Okay, so just from an academic perspective, I think that undoubtedly there are big inefficiencies here, especially in the ICO Gold Rush, as it is. You have so much money flowing in, and you have so much information asymmetry where a lot of investors have no idea what they're buying, and they don't care. Okay, maybe that's okay. It's their money. They could just do what they want. But there is certainly going to be an overcapitalization of a lot of firms or business ideas that just are not going to deliver on their promises. That could be okay because there's going to be a lot of other amazing stuff going on, but we just have to be cognizant of this and be honest with ourselves and know that we have problems. And therefore, we can then use this as an opportunity to try to solve these problems. We can come together as an industry, self-regulate, try to create businesses that triage, for instance, these ICOs. Like I have a buddy who set up a boutique investment bank to essentially triage ICOs and certify them and say, we've deep dived on their code, we've deep dived on their business process, it all makes sense, it's legit, thumbs up, go ahead and just buy in, right? So we can do things like that. There are no asset pricing models that anchor reality. Okay, we have no idea what a Bitcoin should cost. Right? I have this argument with, or debate I should say, with finance professors quite often, where they're used to this world of the intertemporal CAPM model or the arbitrage pricing model, and they say, well, Bitcoin doesn't fit in there, therefore it makes no sense, it should have zero price. Well, I think that they're wrong. Math doesn't create reality. Math at best could maybe describe or approximate reality. So we're still entering new territory, though, where we don't have these theoretical anchor points to know what kind of makes sense for pricing. So maybe things are in a bubble. Who knows? But I think it's pretty audacious or arrogant of some people to just declare definitively that it is a bubble, because we don't know. This could be the next internet revolution, which today we're kind of glad that happened and created trillions of dollars in economic value. And traditional assurances don't exist. You buy an ICO, oftentimes, at least when ICOs first started, you really weren't buying anything concrete, nothing like legally concrete. You weren't buying equity in an organization. You weren't buying, truly like some token that you could redeem, later on, like it's a debt instrument. You were really buying a promise. You were buying potentially some utility on a network that didn't yet exist, right? So I think that these pose certain jurisdictional issues for, say, this company defrauds you or they don't deliver on promises. Well, you have no legal recourse to actually get your funds back. Okay, so just some issues that we need to think about and try to solve. Okay. Now, here's what we're doing at ZenCash. All of this to say is we know that we have issues. We know we're doing some really innovative stuff. Well, I don't like to complain about things. I just want to get out there and make the world better. Okay, so here's what we're doing with ZenCash. We took what we think were the best practices across the industry in a variety of dimensions, from the privacy primitive to creating a decentralized governance model, and we're trying to wrap it all together and try to move forward where I think that I have no idea what the right answers are to all of the world's problems, but I think that we all ought to try, and the more times we experiment on things, the more likely we are to have good solutions to our problems. So as ZenCash, we're building a truly anonymous cryptocurrency. Now, I think this is really important because a lot of people around the world are poor, not because they don't have opportunities, not because there aren't entrepreneurs motivated to get into that market, it's because there's something blocking them. And that something tends to usually be an inefficient regulatory regime that prevents them from participating in something. So if we're building all this cool stuff in the world, in this industry, I think the first thing we need to think about is build strong privacy into the protocol, into the basic primitives of what you're doing. That's what we're doing at ZenCash. We built in there right away zero knowledge proofs to make sure that no one in the world could know who you send money to, what your identity is, what the recipient's identity is, or how much money you sent. Now we're doing this over, for the first time in the cryptocurrency industry, a fully end-to-end encrypted network where we layered in TLS into the protocol level. So now our nodes are encrypted and sending traffic, data packets over an encrypted network. So now this solves some of the metadata issues for how people use correlation analysis to track a transaction to an identity. And we're also playing around with the economics, right? I'm an economist, so I'm trying to tweak things a little bit where I think I look at a palette of stakeholders out there, and the way that the Bitcoin's set up, which is a beautiful system, how they reward miners, and they only reward miners. And everyone else is considered kind of a volunteer. You do things because you love the system. Well, I figured let's tweak the economics a little bit. We'll take best practices from other projects like Dash, and we'll divert some of the mining reward into a community pool where we can actually fund people who promote the growth of our project. Like we pay our developers. Yeah, we hire a marketing team. We hire a bunch of business people to help out, right? So we're kind of tweaking the economics to make it a little bit more efficient. And then we're actually experimenting. I think the most fun aspect of what we're doing from a crypto economics perspective is we're building into our protocol now a decentralized governance system to figure out how to allocate these resources without human beings actually touching them. Right? We talk about this concept of a DAO, like a decentralized autonomous organization in this industry. It's kind of the holy grail of the industry. Well, we're building that, and we're doing it based on a couple years worth of game theory research that we're building into code right now. So it's a fun project, but to put it all together, we're Uberizing finance. This is huge. We're moving away from this oligarchical model where you have a certain very strong stakeholders that kind of dominate a system, and we're pushing it out to the people. So it's a beautiful thing, just fundamentally what we're doing, but it has problems. You could do a lot of things on the blockchain. I didn't talk about a lot of these things, but there's other people here that do talk about them. Like we actually have a secure communication messenger in our protocol. So now you can communicate with people over zero knowledge proofs. There's no way anyone can know who's talking to who and what they're saying. Even if you fire up your Signal or Telegram app right now, your phone knows who you're talking to, or your other contacts know that you have that app. Well, that itself is a potential vector, attack vector. So we solved that. One of the first things we did with a truly secure anonymous messaging system. You could do universal identities where people that are kind of out in rural India now could do biometric enrollment of who they are to prove to the world on a blockchain, I am this human being. I have rights. I should have a right to participate in a global, economic system. Well, now they do with blockchains. The technology is here; it's just not evenly distributed yet. We'll get it out there. I view this as a very big moral imperative for us. And one of the biggest moral imperatives for me is eradicating this plague of inflation. It continues to decimate human welfare around the world. It is so unacceptable in the 21st century to have rampant inflation in certain parts of the world. So we can solve that now. We offer a competing economic model where people can voluntarily participate in it and get out of their high jurisdictional risk wherever they happen to live and get into our potentially more stable economic systems. At least we're trying to make things stable. There's a variety of other things that we're doing, but truly there's a huge bright side to this industry, and we're changing the world. I really believe that. But we also have to be cognizant of and honest about the dark side so that we can fix things and not just get up here and parrot all of the good stuff and ignore all of the potentially bad stuff. So that's all I have today, but I'll be around if anyone has any questions, wants to talk. So, yeah.